Starting January in 2025, federal loan interest rates are going to be increasing about 8 to 9%. So this means that if you're paying, let's say, $400 on your student loans, having to pay $50 to $100 more per month. Well, obviously, this can directly affect how much you can afford buying a house. For example, if you're making $60,000 annually, this change could reduce your home buying power by about $20,000. But don't panic, I got you. I'll show you how to kind of offset this in a bit. And I ain't talking to rapper. Now, there are some federal ones, but be very you got to look into the state ones. Consider switching to income-driven payments. It might hurt you if you're making higher amounts. It probably won't. If you want to know what that is, basically, it's like they charge you interest based on how much money you're making. So it has a place. And it's not like universal. Oh yes, do this. Like if it makes sense for you, then do it. If it doesn't, then don't. Another thing you can do is house hacking. So what you do is you buy like a duplex or a triplex or a fourplex, you get an FHA loan on that, 3.5% down, live in one unit and rent the other one out. And you can have that person help you pay the mortgage. And then at the same time, you'll be building equity in your house. You'll be a homeowner, my homie. Yeah. For example, there's a first-time home buyer tax credit for $15,000. And I would say also consider buying in January or February, where there's generally, again, this is going to be different based on when you're buying, but there's generally about 15 to 20% less competition, which could lead you to better buying power and more negotiation power.